Hey everyone, welcome back to Corporate Decoder, the place where we hopefully make sense of those massive corporate filings. This time we are diving into Hope Bancorp's annual report, and believe me, this one has a little bit of everything from bank mergers to some serious economic storm clouds on the horizon. First, a quick heads up, there are some forward-looking statements. Basically, the company is giving its best guesses about the future, but there are a ton of things that could throw those guesses off. They're talking about everything from the economy and politics to natural disasters and even cybersecurity, so do not treat them as facts. Hope Bancorp is a bank holding company, meaning it owns Bank of Hope. They are based in Los Angeles, but they have branches all over and even a representative office in Seoul. Okay, so what have they been up to this year? Well, they sold a couple of branches in Virginia to another bank, Promise One. But that's not all, there is something bigger too. Hope Bancorp is planning to merge with a company called Territorial Bancorp based in Hawaii. If everything goes as planned, Territorial will become part of Hope Bancorp. The plan is for Territorial to continue doing business in Hawaii under the name Territorial Savings, a division of Bank of Hope. It is like a bank within a bank. Now let's talk about how this bank makes money. One way is through loans. They offer different kinds of loans like commercial and industrial loans, which are called C and I loans. These are for businesses to help with things like working capital or buying equipment. They also do a lot of commercial real estate loans. These are for people buying or refinancing commercial properties like hotels or office buildings. Hope Bancorp also works with the Small Business Administration, or SBA, to provide loans to small businesses. The SBA partially guarantees these loans. The bank has been designated as an SBA preferred lender, which helps speed up the process of approving these loans. Another thing they do to make money is investments. They buy different kinds of securities like U.S. Treasury bonds and mortgage-backed securities. They also take deposits from customers, and they borrow money from places like the Federal Home Loan Bank to fund their lending and investment activities. So where does Hope Bancorp operate? They are mostly in California, but they have branches in other states too, mainly in areas with diverse populations. Like any bank, Hope Bancorp is affected by what the government and regulatory agencies do. Things like interest rates and banking regulations can have a big impact on their business. The rules are set up to protect depositors and the overall banking system, not just the investors in Hope Bancorp. The FDIC can step in and take action if a bank isn't meeting certain standards, including requiring it to submit a plan to fix the situation. Hope Bancorp has a lot of employees, over 1,200 in 2024. They say they focus on attracting and keeping a diverse group of qualified bankers, and they have programs in place for recognition, professional development, and tuition reimbursement. The SEC filing states that employees actively volunteer in their communities. The bank has been giving scholarships, investing in affordable housing, and donating to various organizations to support the wellness of their community. They are even publishing an ESG, or Environmental, Social, and Governance report. Now let's talk about the risks. There are a lot. The economy in their market areas could get worse, which could lead to more loan defaults. They have a ton of loans tied to real estate, so if the real estate market tanks, they could be in trouble. They set aside money to cover potential loan losses, but those estimates might not be enough. Changes in interest rates are also a big deal, as well as fraudulent activity. They also mention key employees leaving or natural disasters since they're based in Southern California. And to top it off, changes in trade policies could cause problems for their customers. Plus, with the upcoming merger, there is always a risk that the merger might not work out as planned. The company also emphasizes that the Board Risk Committee oversees risk management, including cybersecurity, and that they have cybersecurity insurance. This is becoming a very important concern for all banks as well. If any of these risks materialized, the regulators could step in, limit what the company can do, and even force the bank to cease operations. The company may reduce or discontinue paying dividends to its shareholders. The value of their investments could decline. It's worth pointing out that the percentage of non-accrual loans to the total loan portfolio has almost doubled from 0.33% to 0.67% in 1 year. This could be a sign that more borrowers are struggling. This filing is very clear about the numerous ways that Hope Bancorp's financial condition could take a turn for the worse. Speaking of raw numbers, the aggregate market value of their stock held by non-affiliates in June 2024 was over $1.2 billion. The board plans to keep paying those dividends, but remember, nothing is ever guaranteed and can always change. It may depend on earnings and financial situation or the regulators. The company acknowledges that their business and good standing with customers is strongly tied to the image that the company portrays, and thus damage to it, whether arising from regulatory actions, matters affecting our financial reporting, negative publicity, or business conduct, may have a material adverse effect on their business. According to the documents, if you invested $100 in this company, as of today it would be worth $105.65. Not a huge return as compared to similar indices, but still positive over the last 5 years. Let's look at selected financial data for a quick health checkup. The net interest margin is 2.55%, meaning how profitable their lending is compared to assets. Return on average assets is 0.56% and the efficiency ratio is 68.36%. The lower the better on this ratio, indicating they're spending less to make money. Finally, I would like to note that their Chief Information Security Officer reports to the Chief Risk Officer. This is a good sign that the company takes cybersecurity seriously. So what's the story here? It's a mixed bag. The company seems to be navigating a tough economic environment with sales and acquisitions, regulatory oversight, and a changing risk landscape. They adopted some accounting pronouncements, which are not expected to have a material impact on the company's results. The company has a lot of positive things going for it, such as strong compliance and a long-term health vision for employees. One of the most notable is the potential impact of climate change as a California company. On the other hand, their risk factors could have catastrophic consequences on the company's performance. With that being said, given the recent bank runs and the company's acknowledgement that it could also suffer the same fate, you should definitely do your due diligence when considering Hope Bancorp's stock. Hope you learned something today. Thanks for watching. If you enjoyed, please subscribe, like, and comment.